Good morning, it's Jonathan Barrett with the morning debrief. The current time is 7:51, it's the 26th of 8th, it's Friday, it's the last trading day. We wait on tender hooks to see what Ben Bernanke has to say from his fortress down at Jackson Hole. Obviously the markets over the last 3 or 4 days have been relatively positive in the prospect that Ben will deliver another cushion to the economy. Let's see, here we go. Last night we did have a little bit of a sell-off. That sell-off in itself, I guess, just suggests that the market is perhaps just a little bit nervous as to what's happening. Okay, well let's just have a little bit of a recap as to what happened last night before we go into it. And I think if anything there, looking at just the overview, there we go. Just came the Dow down 170 points at down 1.51. Yeah, not that positive. S&P was down 18, Nasdaq was down 48. The top 50 in Europe was down 22 at 22.16. The FTSE was down 74, and the CAC was down 20. The DAX was down 96. So a little bit of an issue there, a bit of a bump there, I think, as we can see. I guess so. Basically, it's really up to where the markets we think will go after Bernanke. I think the market will probably be a little bit quiet leading into it, and if we get some snippets, then that hopefully will give us some lead. The local market was down 49 points, 4,165, so relatively stable from that side. Okay, let's have a look now. As we normally do, let's have a look at that dollar. The dollar's 74.29, and when you look at the way it's trading, it's still here, but look at this divergence starting to appear. Now that, I don't know what's going to happen, but just that divergence here is something to look at. Maybe it's all going to culminate in the timing, but from a technical perspective, that's looking quite bullish. Let's have a quick look at the hourly chart for that dollar, and then we'll be able to see. And then, as you can see, a bit of a spike there. So, you know, timing models are all suggesting that, you know, the volatility we're seeing is going to stick with us for a while. The chances are, obviously, that the favoured move is for that dollar to trade higher. Just so we know, just have a quick look at that dollar yen. That's 77.45 at the moment. Had a relatively strong night last night. That's just up a little bit. Perhaps we might get volatility moving around. At the end of the day, that dollar yen might trade a little bit higher. Once again, you can see that divergence there a little bit on that dollar yen, suggesting dollar strength. How does that play out with the Aussie? 104.18. Come back a little bit, probably expectations there. Aussie remains stable and probably see it actually testing that lower end of the range again. I guess my target there, down to 102.20. So obviously looking for some dollar strength somewhere along the line. Let's have a look at gold. Obviously gold's been a big mover and shaker, and certainly exceptionally volatile. We've talked a lot about it in a lot of the shows, and you know, in my mind, you know, people have said, oh, it's got further to go, is this a bubble? Look, there is a change, there's no doubt about it. There's a change in sentiment, but what's different on the horizon between today and at the beginning of the week? Well, not a lot has changed, except that a lot of week-longs have now exited the market. So in retrospect, when I look at that, you know, the dip scenario still looks to me quite positive. So the range we've got is 1920, 1700, and I think that's where you look at. You would be buying dips to 1730. You'll be out at 17 or a break below that. And that's similar, but because even looking at silver, for instance, silver had a fantastic move last night. 41.06 is where it is. 39, a great move from there. So, you know, this is just a buy and dip scenario. I'm quite comfortable with that at the moment. We've still got a long way to cover, a long way to go. How some of the commodities trade? Other commodities are crude, 84.97, and mixed inventory data, as you can see, not doing too much. If anything there, perhaps there's a little bit more of a test to the top side. Resistance comes in at around that 88.70 level, but we're around this support. So at the moment, anyone's game, but I think more consolidation. Copper had a good night last night. The Chinese, we know, are looking at the market. One of the fears that we have is that we have a double bottom there. The idea now is to see how that double bottom performs. Now, you can best see that on a daily chart. And you can see that on a daily chart there. That's that low there. You know, obviously, I think you can comfortably have a look at going long, but you've got to be realistic. If it breaks through that level there, we're out. and I think that's what I actually think. So the Chinese also, if they come to the market, they will look to buy, but if it starts to move higher, then they'll rush to it, because remember, they've lived through this destocking stage, and now after living through that destocking stage, they're basically, if it starts to move, they've got to jump to it. So if anything there, I think that that we could see it back in the range, maybe a little bit higher from here. Okay, so we mentioned all the majors. Have a look at the local market, 41.65, down 1%, down 49%, so there's a little bit of weakness out there. Look, I guess there we are there. You just look at it, consolidation, back to that 4, it's still within a range. So I guess if you look at the big picture, 4,200, and on the downside, 4,000. So expect some more consolidation in that area. Okay, one other thing I wanted to have a quick look at. I want to get people to keep cotton on the radar, and just keep an eye on it. No need to do much on it, but I think with what's happening in Texas, we might get just a little bit of a concern as to what's happening there in terms of supply. If there is an issue, then the chances are we lose 6% of the cotton on the global market if that drought continues. So I think that to me is something just to keep an eye on, monitor the price action to really see if something does occur there, because it could be good trade, and you can hopefully see by the chart, that's if the chart comes up, what we're actually thinking, because it's because I think there, if it doesn't come up, we'll try something else. Because you can see that it's had a big move. If not, have a look at the bulletin, because the bulletin gives us a bit of an idea the bulletin will give us a bit of an idea. Let's just try that. That's worked, so let's move that out and go into cotton, and let's just try again. Okay, looks like it was there. We go. That's what I want you to see. 235 on the top. We're down here, so keep on watch. And I think that's the key. Okay, just a little bit of on watch there for cotton. Okay, now what do we have coming out in terms of economic calendars? I really think, obviously, Bernanke is the key for us, the key number, and you know, we're going to see what actually comes out. GDP as well tonight, personal consumption and core, University of Michigan confidence number. But I guess the tier 1 piece of data is obviously what Ben has to say. Do we expect a QE1, QE3? QE3? Do we expect a QE3? No. We're actually of the view that he'll be more persuasion, knowing full well that if anything happens, they'll be on the guard, ready to act if needed. But there we go. He speaks at there, gives a speech to Jackson Hole. That's 2 p.m. GMT time. So just be wary on that. Okay, well, I think that's pretty much about it from me today. Let's see how the markets operate. There's a few opportunities we're looking at. I think it's idea to have a look at that the dollar trade. That divergence just it sort of feels as if something's there. I can't work out what it is. Maybe it's got something to do with Ben's talk tonight. Anyway, let's see how it goes. But that's it from me. Have a great week. Happy trading. We'll talk to you later. Bye for now.